This is the biggest week of earnings season, not only because we're getting a bunch of the Mag 7s reporting again this week, but also because we're going to hear from a lot of companies that are going to be impacted in tariffs and on any kind of recession or global economic slowdown. So are those companies? There's going to be a lot of travel companies reporting this week, including Royal Caribbean, Booking, Airbnb, and others, including a bunch of hotel names. And then we are going to hear from some of the other big companies that are doing, import, export, and all of that. We're going to have some retailers. We're going to have companies like Caterpillar and Stanley, Black & Decker also reporting. So I've put together 5 names to talk about this week that I think you should keep on your radar. There's many more than just these 5. And I'm going to be tweeting out some of those as the week goes on my own Twitter feed and on StockTwits and Blue Sky. So wherever you can get the tweets these days, you will find the charts. But these 5 are the big kahunas, I feel, for this week, and or ones that you really should be watching for any kind of, guidance, anything out there amidst all this uncertainty. So let's dive in with the first stock. And this one is the one I bring every quarter. It hasn't missed since it went public in 2008. It is, of course, Visa, ticker V. Here's the price and consensus and EPS surprise. I'm showing this chart this quarter because we do want to see what's happening with the earnings estimates going into this earnings season. And as you can see, it's got the perfect track record, like I said, going all the way back. And look at this price and consensus chart. This is what you want to see as an investor. So there's no other chart that's as good as what this is. We can see with these lines for 25 and 26 that there's no downward slope. No estimates are being cut here. Not yet, but we'll see what's going to happen this quarter. You can see, though, the shares did come down off those highs during this sell-off period. They have rebounded a bit. They're still up on the year, up 6.8%. So was this a buying opportunity? Still trading around 30 times, but that's not as pricey as it got all the way back here. You might remember that it was trading around 40 times, 40 to 45 times way back here in 2021. But this period of just kind of going sideways has really righted the ship and re-rated the stock with the PE as earnings have continued to grow. So this is definitely one everybody's going to be watching. Is this a stock you can hide out in? It looks like it, but we will see. So that's Visa, ticker V. Then I did want to talk about Stanley Black & Decker. Because this is one that, didn't recover like Visa did after the big highs here in 2021, then the sell-off. And now this one is still moving sideways and then has plunged down even further here in 2025, down 21% year to date. It now has a PE of 12 because these earnings are still expected to be higher here. And we aren't really seeing any decline here from the analysts either. So is this a matter of, the street just a little too nervous about tariff impacts and they're not going to see it, or even impacts on the consumer here? I don't know, but this is another one that I'm going to be watching. It's got a great earnings surprise track record as well. Just the one miss here in 2022. So it's been putting together quite the show here, but now the shares have broken down. Is this a time to buy it? We will find out. Stanley Black & Decker, SWK. Then we're going to switch over to some of the Mag 7 stocks. And one of those that I think you should be watching, Microsoft. This stock has actually been weak for over a year now. And this year it has really pulled back, down 7% off of the start of the year. But you can see it's basically retesting these lows going all the way back to 2023. And this one, valuation has been a factor, even with this earnings growth that's expected. Now, this one also has, pretty much straight across the board, but 2026, you can see it weakening a bit here, going all the way back into 2024. Will that be the case? We don't know yet. And that's what makes these Mag 7s so interesting. PE of 30, really still a high price to sales ratio also with Microsoft. But we'll see if it can execute like Alphabet did last week. Great earnings surprise track record, just this one miss as well. Here in 2022, these names I did not pick out just based on their earnings surprise this week. But I might as well have, because we've had 3 earnings all-stars here in a row. And this isn't easy to do, beating every quarter or nearly every quarter for a full 5 years. And then Visa, again, going all the way back to 2008. These are incredible streaks. So Microsoft I own in my own personal portfolio. We'll see. We'll see if we get a breakdown, a rebound, or maybe nothing. We'll see here with Microsoft MSFT. Then I wanted to talk about another company that's really going to be tariff impacted, and it's Wayfair. Furniture and home goods have been struggling because the housing market has been down for the last 3 years. But then you throw on tariff impacts, and Wayfair gets its products from all over, but a lot is in Southeast Asia and China. And you can see these shares also weak here on the year, down 30% now on these fears. You can see a little bit of weakening here in 2026, maybe some estimates being cut there. And 2025 had already weakened to basically flat anyways compared to 2024. Coming off a big miss last quarter. And so what's it going to do this quarter? I'm a little bit scared on Wayfair, to be honest. PE is at 59. So it's not a cheap stock, even though it's hanging out down here. But this is going to be a first look at real big tariff impacts on the furniture side. So this is Wayfair, ticker W. Then I did want to cover some travel stocks because this is such a big week for the travel names, but I'm going to go with Airbnb, ticker ABNB, and you can see it has a decent earnings surprise track record. It did beat last quarter pretty significantly here. If I can get it to hover, yes, 25% coming off of those 2 misses. Not surprised they turned it around, but look at these earnings estimates. They are on the decline. This is the opposite from what we want to see, which is what we're seeing with Visa and even Microsoft. Down and to the right, and still kind of weakening here as nobody really knows what's going to happen with travel globally. But the airlines are pulling back, and that's always a bad sign for both hotels and these online travel agencies, and then something like a Vrbo or an Airbnb. So, it's trading down. It's not that cheap, trading at 29 times. It has recovered a little bit off of those recent lows, but still down 4.9% year to date here. And so can we break out of this range? It's been range bound going all the way back to 2022. I don't know, but travel stocks are areas that you really probably don't want to own if there's a recession that is about to be imminent. So we will see. You might be able to get in a lot cheaper on this one if you have patience. But that's Airbnb. The earnings time has come, so we will see. So as you can see, it's a mix of stocks. These don't even cover all of the areas that we are going to be watching this week. Like I mentioned, there's a lot of travel names, but there's a lot on the industrial / tariff side of things that could be impacted. So make sure you are tuning in to the conference calls of your favorite companies this week. There's a lot. And again, get my social media feeds because I'll be covering a lot of these. We also will have updates on Zacks.com once these earnings come out. And so you don't want to miss that as well. So be sure to get us here on YouTube. Get us at Zacks.com/YouTube on our YouTube channel and everywhere else we will be posting this. And I'll see you again next week with some more charts.